Well, hello, everyone, and welcome to Magna Gold's live investment summit today, hosted by Six. I'm pleased to introduce President, CEO, and Director Arturo Bonillas. Arturo is going to walk us through a company presentation, and after we will be accepting questions live. So as a reminder, you can submit your questions at any time on the Q&A panel on the right-hand side of the screen, and we'll try to get to them after the presentation. There's also a copy of this presentation available for download under the Handouts tab, which is also on the right-hand side of the screen. And as always, the summit is being recorded and will be available to watch afterwards on Six.com. But without any further ado, I'll hand it over to you, Arturo, to kick things off.
Thank you, Dasha. Thank you very much. Good morning to everyone. And thanks, Six Media, for the opportunity to update our investors and shareholders and your public. Magna Gold is a company that was founded a little over 2 years ago. We began as a small capital pool corporation with the initial exploration property. Now, in those 2 years, we've become a producer. We are focused in Mexico. And I will go through the presentation for the ones who do not know who we are or a refresher. This is a picture of our producing mine in the state of Sonora, Mexico. The company share price has been quite exciting. A year and a half ago, we were trading at around 30 cents. We were trading at a time at $1.50. So for all the initial shareholders, this has been a fantastic investment. Since day one, our mission was clear. We were not going to be only an exploration company, but we, given our experience in Mexico and our fantastic team, by 2023, the mission is to become a multi-mine precious metals producer. We are talking about 200,000 ounces per year of gold equivalent production by that year. And also to develop substantial gold and silver mineral resources on those properties. We're currently a third of the way there. Quickly, our management team and board of directors is a diverse group of Mexican nationals and Canadian experts in both operations, markets, and law. And especially now we've added Amandeep Singh as our Vice President of Corporate Development. The company's share structure, we have a total of 90.06 million basic shares outstanding and fully diluted 97.01 million shares. Our trading price yesterday was 92 cents. So to give us a market cap of about 83 million Canadian dollars. The ownership structure on the right side, you can see that we have 45% institutional investors with major shareholders, with important shareholders like Eric Sprott himself, US Global, Delbrook Capital, Metals Capital, and Adrian Day. And we have two strategic partners, Argonaut Gold, with 12% of the company, and Peal de Mexico, our mining contractor, with 16% of the company. Management and board, we have 8%, and only 19% is retail. We are, as I said, located in Mexico. We're located in the state of Sonora, Mexico, bordering with Arizona. We have organically been developing and operating very interesting properties. We have currently 3 gold properties, the San Francisco Gold Mine, which is operating and has tremendous growth potential. We also have the San Judas Gold Project and the Mercedes Gold Project, which was our CPC initial exploration property, which ended up being a very good property. We are also into silver. We're both now a gold and silver company, and we have various silver projects. The most important one, the Margarita Silver Project, which is located in the state of Chihuahua, and I'll elaborate more into it. This is a photograph, a plan view of our operations at San Francisco mine. You can see that we are next to the international highway. We are 1 hour and a half drive from the border with Arizona and to the north, and an hour and a half drive to my home, where my office is, in Hermosillo to the south. We have process facilities, 2 open pits, an underground mine that we opened, and enough space to grow. We currently have a resource of 1.43 million ounces of gold in the measured and indicated categories of 0.446 grams per ton of gold. And those mineral resources were estimated at $1,500 per ounce. To the left, you can see the mineral reserves, which is fundamentally our current mine plan. We have 752,000 ounces of gold of 0.5 grams. You can see the strip ratio of 2.5, which is the mine plan for the next 7.5 years. We acquired San Francisco mine last year at a very good price. We paid the equivalent of $10 million US, half of that in shares of the company at the time at 30 cents, and another $5 million on 1 year payable, which we've covered. We completely own the mine. We acquired it at that price because the mine was about to shut down. It had already stopped mining activities from the pit, and it had very serious problems, both operational and legal-wise. We have resolved all of the issues. We are now at full-scale production, back to where the best days were there before last year. We have as I said, a 7.5 year mine plan, close to 8 years, with an average annual gold production of 69,000 ounces. Total gold production of 527,000 ounces, at an average cash cost projected at $1,160 gold and all-in sustaining cost of $1,204. You can see the NPV at $1,800 gold, discounted at 5% of 186 million US dollars. And at $1,600 gold, at 126 million US dollars. Now that was our starting point. We are currently drilling and improving the plan. Our objective here is to, within next year, have a 10-year mine plan with 90 to 100,000 ounces per year of production. We are still drilling. We have already added ounces to the mine plan. We have not published that because we need a formal 43-101 report, which we will do early next year. This is just a few pictures of the mine. This were the ramp-up areas. We were in a ramp-up between June of last year and this year. June of 2021, we announced that we were back at full-scale production, which we are. And you can see on the top left side, San Francisco open pit. On the right side, the La Chicharra open pit, both operating. We also opened up an underground mine, which is giving us some nice grade. And you can see the process facilities on the bottom right side. Rated capacity of 22,000 tons per day. We have reached that capacity already. The ramp up took us to a mine that is now generating cash flow, that is profitable. As you can see on this graph, the blue line indicates the strip ratio that we had before we were able to reach the sustained ore facility. And the orange line shows the gold production per quarter. We have reached commercial production, as I say. We declared it June 1 of this year. The strip ratio is trending now towards life of mine average of 2.5, which is in our mine plan. We had an average of the previous year of about 7 or 8 to 1, so we had to move lots of tons to be able to get to the ore. We anticipate a run rate of more or less 7,000 ounces per month of production by the end of Q4 2021. I'd like to tell you that we've already reached that, or very close to it, because we just produced 19,102 ounces of gold this current quarter, which is Q3, at an estimated cash cost of $1,134 per ounce, which is actually a little below our $1,160 per ounce on the guidance, and a realized gold price of $1,776 per ounce. So you can quickly do the math and see that we are generating an important amount of cash, and that's very satisfying, and it gives us lots of comfort. Well, we are underrated, of course. Everybody says they're underrated, but we're trading at about 0.35 times NAV, which is quite low, and that NAV will increase next year. We have room to grow, a lot of room to grow at San Francisco mine. You can see two cross sections on top. You can see where the gold is trending. The extensions of gold or are extending. We are currently drilling those three extensions. That the one top left cross section is looking west. The cross section on the right side is a longitudinal cross section looking north. The most important thing here is the potential of growth towards the east, which is the right side. You can see some red spots there of previous drilling that we basically cut the same drill holes that we had done initially years ago, 10 years ago on San Francisco pit. So we expect another San Francisco pit on that area, again, to the right. And then we have La Chicharra, which, that picture shows the density of drilling. La Chicharra also has potential to become another San Francisco pit with additional drilling. So we're working on that as a priority one. This is some of the magnetics, and I will not get into this, but the anomalies that we found on magnetics and IP and structural geology show that we can repeat the same phenomena over 40 kilometers running north. We decided last year to acquire and go into silver. We acquired a very exciting silver property called Margarita in the state of Chihuahua, Mexico, which is also a northern state that borders with New Mexico. We acquired this mine. This is not a mine, it's an exploration project, but it had already had 35 drill holes. We bought it from Sable Resources, and they've already completed the 700-meter drill program. And we really liked it because of its high grade. We are surrounded in Margarita by the Los Gatos silver mine, which is a new company called Los Gatos Mining Inc. It used to be called Sunshine Silver. It is fundamentally the same geology, but we're a little on top of it, and we began drilling 2 days ago, core drilling on the property. You can see this is a sample of the grades that Sable encountered that we are drilling and infill drilling. You can see grades of silver, pure silver, up to 800 grams, 400 grams. It has some lead and zinc additions. Not the ones that you find on the Los Gatos silver mine yet, because we're in a higher elevation, but this is currently almost a pure silver play. Some quick numbers that I calculated weighted averages. You can see the width of the core over 17 meters. We averaged 220 grams per ton of silver equivalent, which is quite good in Mexico for an underground mine. But that within that drilling, we have almost half a kilogram of silver equivalent over 3 meters. So that tells us that we can actually build a mine that very quickly with very high grade intercepts. So what we are doing here is currently we have begun, as I said, a drill program. We began a 10,000 meter drill program, and that is designed to deliver a maiden resource and a preliminary economic analysis by the end of Q1 of 2022. Why a PEA so soon? Because I think, first of all, we can do it. And also, first of all, because when we finish this, this property will add value to Magna Gold. I have a very, very clear ideas of what we're after here. My expectations is that we will be finding or generating a PEA within around between 30 to 50 million ounces of silver equivalent, an underground mine. And with good metallurgy, Sable did some metallurgy on this property, which looks very good. We have started our own metallurgy, and again, we will complete a full PEA. We say a full PEA by PDAC, and you will see that I think that I'm very, very optimistic. I really like this property. It's also a property that's near infrastructure. It's next to the road. It's in a good mining state. And finally, we have a lot of projects, the ones that I showed previously. We have about 5 silver properties and 3 or 4 gold properties. This one is our initial property, as I said, Mercedes. We drilled it. We have a maiden resource of almost 50,000 equivalent ounces, open pitable right on surface. However, we found many interesting areas in this district. We now strongly believe that we are in front of a base metals, fundamentally copper, high-grade copper, in parts of the system besides the gold areas that we also plan to drill. We found lots of old historical mining activities. You can see, the underground mines. You can see grades that we took. We sampled out of those areas. High-grade gold, 10 grams at a time, and other areas we have, for example, 26% copper. You can see the massive sulfides there, the gallinas, and so this one requires also an important amount of drilling and of exploration and then drilling. We will tackle it on time. To wrap it up, these are our catalysts. Number 1, the San Francisco gold mine. We are increasing the mineral reserves, optimizing production plans and to increase our NPV. And as well, as I mentioned, we are in production and the mine is generating profits. And we also have within the package that we acquired from the San Francisco mine, other 4 very, very interesting targets that we will target one of them with the idea of having an additional open pit, satellite open pit. The number 2 catalyst is the Margarita silver project, which I mentioned. 10,000 meters of exploration we began already, and to have a maiden resource and a PEA by early next year. And the Mercedes project, we will continue to drill test historical targets and evaluate the base metals potential. That's what we have now organically. I'd like to also add that we are also very active on M&A, and the team is in high spirits. We are full speed ahead with with our mine and operating mine. So thank you very much. Thank you for the opportunity for the update, and I hope you have any questions.
Great, thank you so much, Arturo. We're going to open the floor to a live Q&A, so if you do have any questions, feel free to submit them. Arturo, can you please elaborate more on the ramp-up and on reaching full-scale production?
Yeah, the ramp-up took us quite an effort because we had to remove 18 million tons of waste material to get to the sustained supply of ore, as I said. And we did that without raising any equity. The only equity we raised was a year ago, even before we got the mine. So we didn't issue any stock. And we'd like to say that we want to produce gold, not stock. So, but we got to that point. The previous years, I said, 7-to-1 strip ratio. Currently, we've reached our life of mine, which is 2.6, 2.5. I'd like to mention also that our costs, I saw a question here about AISC comparison with our costs. Right online, AISC is 1150 or so. We did $1134 per ounce this quarter. All in will be around a little over 1,200. I think it's 1,250 on our published report. We don't have we've not concluded our formal accounting IFRS, but we will be very close to $1,200 per ounce.
Okay, great. Thank you so much. And during Magna's last summit with us in June, the company had recently acquired the Margarita Silver project. What are the near-term plans for that project?
Well, that one, as I mentioned, and the near term is to bring it into a PEA, preliminary economic analysis, as soon as possible. I expect a good NPV out of that project, and so that it adds value to Magna as a whole. And then we will maybe become a silver producer, not far in the future.
Great, thank you. And in terms of M&A activities, what's next for Magna Gold?
We are very active on M&A. We've made offers. We're negotiating operating mines. We are targeting fundamentally operating mines that are either too small for other companies, or that went in trouble for some reasons, or that run out of money. But properties that we can turn around, as we did at San Francisco mine, and put them in production quickly, or properties or mines that are near-term production. So we are very active on that front. We have, as a Magna Gold, the team, we have the capacity to do two more mines, to operate two more mines. So as Magna Gold, currently with our contacts and our people and relationships, we can operate 3 mines concurrently. So we're aiming at that.
Great, thank you. Tomas has a question. He's asking, can you say something about the underground mining you started at SF and the potential of that going forward?
Yeah, the underground mine we began as an emergency decision we made early when we took the mine, because we needed the gold to send to help us to cover the pre-stripping. The underground mine it gave us about 12,000 ounces of gold during that period. We have stopped that because we now have our process capacity full from our mine plan. The underground mine, the future of that is continued drilling. It extends deeper, but at this point in time, something we did not do when we were going in is do enough drilling, exploration drilling and delineation drilling. So that's something that we will continue to do. We found a very high grade, very deep holes, but I'd rather have a well-rounded mine plan for the underground mine. So that's still open.
All right, thank you. Our next question here is a long one, so bear with me. Your target is to reach just over 200,000 ounces production per year by 2023. In the past, you mentioned that the target AISC should be around $800 only. Currently, on the San Francisco mine, you have an AISC around $1,200. So what is your plan to achieve such low AISC in the year 2023 to 2024?
Yes, of course. That's our mission since day one. Part of our mission is to become a sub $800 per ounce producer. How do we get there? One, through economies of scale on the San Francisco mine. We may do an expansion there and reduce the cost, not sub 800, but maybe sub 1,000. Number two, to develop for example, the Margarita silver mine, which is very high grade, and we want to do that quickly. And number three, to make acquisitions of mines that, as I said, are operating or were operating before. We have had lots of offers. We are assessing a lot of opportunities. But that is sort of like the mapping out of it. I'm very comfortable that we will be reaching those cost levels, which is important and necessary for the company.
Great, thank you. We have our next question here. Can you elaborate on the M&A, jurisdiction, and kind of metals?
Yes, we are precious metals. We were pure gold. Now we went into silver. So we're a gold-silver company. And we are looking at those. We're not looking at copper or base metals. We may have on our Margarita project a base metals area, but we do have a substantial portion of the Margarita property, our Margarita property, of gold. I think that we can do a lot there. We also may be looking to monetize some of those portions of properties that are not our core. And we also have already a lot of interest in participating there.
Great, thank you very much. Rainer is asking, can you elaborate on the history of the San Francisco mine? What did you do better than Argonaut did?
Yeah, it wasn't Argonaut. It was Alio Gold, whom we bought the mine from. Argonaut ended up buying Alio Gold after we acquired Alio. What happened was, I think, I wasn't there. I was there until I was president of that company, founder of Timmins Gold, and president until March 2017. I left then. And I think that, I wasn't there again, but what we found is, number one, that the previous company may have not interpreted correctly the geological model, specifically and fundamentally on how to assess dilution, which is an important factor to know. And so there were extra ounces that were not in the plan of their plan. And number two, so that without finding that ore they were expecting, so they ran out of ore, and it also ran out of money. Number two, the execution of the heap leach pads. The one big problem is that the company tried to leach run-of-mine material. Run-of-mine is just uncrushed material, and it was waste. So they placed a couple of million tons on top of the leach pads, and that destroyed. First of all, it just did not extract the gold they were expecting because it wasn't possible. And number two, it destroyed the chemical balance of the rest of the leach pads. By that, I mean that the pH levels, which is an important factor to maintain at 12.5 pH. When we arrived there, it was at 8.5, which is tremendously disturbing. So we had to maneuver to do that. And thirdly, the other problem was not an operations problem, was a legal problem with they're being sued by a mining contractor. We inherited that, and we were able to negotiate with that contractor, which became our shareholder. In general terms, that what happened. What are we doing now differently? Well, we interpreted the geological model correctly. We developed a mine plan accordingly, and we reached the ore. We reached the strip ratio of 2.5, 2.6, which is what makes sense. And also we reinstated good practices on the leach pads. We also built new leach pads. So we did a lot of things to do it differently, and that's the way it will continue. Our metallurgical recoveries are back to normal, between 68 and 72% recovery of gold. And we are actually at a rate of 80,000 ounces per year now of production. Of course, it will vary because of the grade, but we're there. And as I said, we're generating money, which is very comfortable.
Excellent. Thank you. I think we have time just quickly for one last question. Amandeep is asking, you mean Mercedes, not Margarita, right?
Oh, yeah. Well, Mercedes is a base metals, yes. I'm sorry, I probably said Margarita. No, I was talking about Mercedes and as a base metals property. No, Margarita is priority one. We will not sell that or do anything. Our plans are clear. Thanks, Amandeep.
Perfect. All right. Well, thank you so much, Arturo, for taking us through the presentation and the Q&A. And thank you for everyone who joined us today and asked great questions. If we didn't get a chance to get your questions answered, we'll make sure that the Magna Gold team can follow up with you directly. You can also ask your questions directly to the company using the contact information on the slide here, and they'll be happy to follow up with you. You can also find more information at their website, magnagoldcorp.com. And as always, a recording of this presentation will be available to watch again on 6.com. But I'll pass it back to you, Arturo, just for the final word before we close out.
Sure. I'm looking here at some questions that were unanswered, like Paweł Linka, Andrzej Żuronek, Thomas Asna. So I'd really like to get their email addresses so that I'll be able to respond to them. I have a question, Paweł, on our cash situation. How are we gonna fund Margarita? Margarita is totally funded, by the way.
Okay. So, yeah, I'll pass all that information on to you so you can follow up with them directly. And is there anything else you want to say before we close out?
No, just keep an eye on us. We are as Amandeep says, we are the 80,000 ounce gold producer that not many people know about. We didn't want to promote ahead of time. We were promoting our team and on the things that we were going to deliver. Now we've delivered them. We've delivered actually on everything we've said. Now it's time to become very aggressive on the promotion, on the marketing, because we are now promoting on fundamentals, on real stuff. So please follow us, and I'll be happy to answer any other questions. And thank you very much, Sasha.